Welcome back. In our top business story, while Dubai's property market in some areas has seen signs of recovery in 2011, in others, new supply coming onto the market has prevented prices from rising. According to property consultancy firm Clutton's, overall, however, Dubai's real estate market saw a 20% increase in sales last year, a trend which will continue also this year. One reason is Dubai's popularity among travelers, many investors perceiving it as a safe haven, and more local buyers looking to buy a home.
I'm extremely positive for 2012. I think that what's happened in the region has helped us in terms of numbers of traffic coming to Dubai in the past. This is continuing. We're also seeing hotels are full. People have come to Dubai, they've seen it, they like it, they see the infrastructure that's here. And I actually think that people are going to come back to the property market because they probably think that Dubai is sexy again. What we're finding is that we probably will not suffer as much this coming year because our buyers are not so much foreign buyers anymore, although there are some clearly, but our buyers are more local. By local, I mean GCC nationals who have realised that the area is very stable and has got great infrastructure.
While sales have gone up last year, many potential property investors are still standing on the sidelines, feeling the supply coming onto the market this year could dent prices. What holds true for some neighbourhoods in Dubai, in other areas, it's not a question of oversupply but excess demand, such as in Arabian ranches or on the Palm. And with the amount of people relocating to Dubai, they all will have to live somewhere.
I see prices falling the most in less desirable areas. Areas where perhaps they are further away from the centre of Dubai, where they don't have the facilities or the infrastructure. The recovery is going to come from obviously the opposite of that, where we do have good infrastructure, good facilities, good recreational facilities, pools, gyms, supermarkets. Anywhere that's near a metro station is obviously very good. So I think it's going to be in a selective stabilisation is what we've been calling it.
The Ministry of Finance and the Dubai Department of Economic Development have signed a memorandum of understanding to cooperate in supporting institutions and private sector companies in the UAE. The MOU also includes reviewing the experiences of the regional and international development partners of the federal government. The MOU is part of shared strategic objectives to contribute to economic policy in the UAE. Investors, businessmen and the private sector as a whole, as well as regional and international development funds supported by the UAE government, will benefit from the new partnership. It also aims to strengthen international cooperation to enhance financial performance and systems. Strong crude prices, higher oil production and recovering economic growth will encourage GCC countries to push forward with their infrastructure projects, according to industry experts at this year's SteelFab Exhibition. Opened this morning by Sheikh Salim Abdul Rahman Al Qasimi, Director General of the Ruler's Office of Sharjah, the exhibition officially kicked off today, hosting 216 direct exhibitors over a 4-day period. The event is a platform for the 600 manufacturers from 26 countries to reveal new products.
Yeah, Rockwood International is part of Al Riyami group of companies, and we are one of the companies who are dealing in, most automated welding machinery. That means we suggest solutions to the fabricating industry, how to reduce the labor cost, how to reduce the manpower, and suggest new and innovative technology.
We are here to introduce new technology. We have here a True Punch 3000 with electrical head. This is relatively new. It's a new development. And with this new electrical head, we can increase the productivity, and with the new software we are able to optimize the nesting of the workpieces in the sheet. In other words, we get out more workpieces out of one sheet. And this is our motto here on the exhibition: turn waste into money.
With a budget of $2 trillion, projects such as metros, rail networks, airports, new roads and expansions are currently in the pipeline. With a positive start, industry professionals are optimistic on the economic expectations for 2012.
Machinery has a certain life. So old machines continuously go out from market and new machines are required. plus, if machines are being introduced and bought, it means that there are new projects and people have a job. That's why they buy machines, so that they can do the job on them. So there is always a market for new products here in the Middle East, because new investors come in, they start business, and that creates a market as well.
And let's now look at the stock indices across the GCC. With companies already feeling the pinch of the economic slowdown, US companies will begin posting their fourth quarter results from this week onwards, starting with Alcoa, who will kick off late today. We have Gaurav Kashyap, head of DGCX trading at Alpari Middle East DMCC, here with us to talk about the issue further. Welcome.
Glad to be back, Linda.
Good to have you here. Tell us about the Q4 earnings season. What are your expectations?
Well, as you rightly said, Linda, we're kicking off the season today on Monday, and unfortunately the expectations and the forecast don't look too good. Now, when I'm looking particularly at the stocks from the S&P 500 out of the US, we're expecting to see a snap of 8 consecutive quarters of gains, of double-digit gains in those US stocks. And we can expect to see more of the same, of weakening growth and weakening earnings reports from the US as a result of the worsening situation in Europe and the slowdown, particularly emanating from China and India. These economies are going through a hard landing, and that's going to have a direct impact on the revenue and the output of these US companies. Now, as you said, Alcoa will be announcing their reports after market closing today. There are expectations that they will be announcing a loss of maybe 2 to 3 cents a share. Of course, this is down from a gain of 21 cents a share from a year ago. So we are looking at this trend to continue throughout the earnings season. The other big announcement from this week will be JP Morgan, who are also expecting to announce a gain, but a lower gain than what they announced from a year ago.
Last week we had quite good US jobs data out. What does that say about the state of the US economy?
Well, Linda, although they did show some positive job growth in the U.S., I'm looking at the numbers with a pinch of salt. Seasonally, what you tend to see in the U.S. is hiring really picks up during the months of November and December because of the strong retail turnout as a result of the holidays. So what you tend to see is a lot of temporary hiring taking place, and you see a lot of demand for jobs such as couriers or messengers, especially during this holiday time. So although we did see gains of 200,000, we can expect to see a downward revision of a more accurate figure of maybe 150,000 jobs added during the month of December. We did see downward revisions during November, which was expected, and we can expect to see more of the same. Once again, we're going to have to see some pretty solid growth of maybe 200 to 250,000 month on month, but I think the more accurate figures will come probably after February or March.